Hello and welcome to the Solutions Scoop. I'm Ravi Venkataraman.
And I'm Amanda Tepper. Ravi and I are co-founders of the Chestnut Solutions Institute, an independent forum dedicated to advancing the future of the investment solutions industry. Here at The Scoop, we examine the latest solutions marketplace developments and speak directly with solutions industry leaders. Our guests span the investment ecosystem, from OCIOs to asset owners, investment consultants, asset managers, and other key industry stakeholders.
These conversations are an important part of the Institute's mission to improve transparency and help establish standards and best practices across the solutions industry by educating asset owners, providers, and all other industry stakeholders. Let's get to today's scoop. Welcome to the show, everyone. Our guest today is Dan Farley from State Street Investment Management. Dan is an executive vice president at State Street and CIO for the Investment Solutions Group and is responsible for the management and development of asset allocation strategies for institutional clients around the world. He leads a team of over 150 investment professionals managing and developing over $500 billion in multi-asset class portfolio solutions for institutional clients and intermediaries. His team oversees the design and management of asset allocation mandates, including DC, model portfolios, tactical asset allocation, OCIO, and overlay strategies. His team also produces original thought leadership, blogs, white papers, articles, and various case studies. He is also a member of the firm's executive management group. Welcome to the Solutions Scoop, Dan.
Ravi, thanks so much for having me.
Dan, we've known each other for a number of years, but I've never asked you, how did you get into this business? How did you start out and what led you to where you are today?
Well, yeah, it's interesting. This has always been something, if you want to go way, way back, that I've been really kind of interested in from just the investment part of things. And I actually will often say it starts with back when I was a kid and my grandfather had given me like 10 shares of Exxon or something like that one year. And so I'd get up in the morning, I'd deliver my paper route back when we had newspapers. And, when I'd come home every day, I'd be eating breakfast before school and looking up my Exxon in the tables in the back of the newspaper and plotting the dividends and all of that stuff. And so, really have always kind of had a interest in investments from that. And so obviously undergrad and CFA and grad school and all of those things kind of added and built to it, but have been very blessed to have been in an organization that has allowed me to move through different kinds of investment roles or getting into investments probably in the first place and then into different investment roles that has allowed me to kind of stay in this and have always sort of had this bit more of a macro asset allocation tilt to all the different jobs that I've had, in what we call our charitable asset management business, initially working with nonprofits, and then more into the institutional business that is now grown to be investment solutions, which is where you and I started to cross paths a bit more. But so it's always been that common denominator, different types of clients, different kinds of geographies and conversations. But at the end of the day, the idea of being a bit of a problem solver and trying to figure out how you can use the toolkit to help clients get to where they need to be has always been a bit of my passion.
That's great. And you're a Boston guy, I take it?
I am.
So it sounds like you've probably were there in the days before there was even an investment solutions group, or has State Street always had one? Or can you talk a little bit about the group?
Yeah. So we've probably been branded the Investment Solutions Group for about 15 years now, but the firm itself has been doing multi-asset going back to the mid 1980s. So this is not a new thing at all. If I think about sort of the first multi-asset client that had what we would call OCIO today, but was not called back OCIO in the early 1990s. So I think this has been an area, given the fact that the firm has the breadth of offerings, we don't just do equities or bonds or small cap, right? And the fiduciary heritage that this company's always had. These are natural areas for us to play in. And so, when I look at that today, that continues to be the case, right? In the sense of being able to go into conversations and something that's called the investment solutions group to actually be focused on solutions and not have to be tilted in one direction or the other. I think gives us a lot of freedom, quite frankly, to engage and really understand what the client is looking for. And so, as you sort of noted, if I look at the team today, covering a wide variety of different types of clients, types of challenges, types of end users. And I think what's been really interesting is that you think about the group, and some of it we do a lot in defined contribution, we do a lot in intermediary, we obviously do a lot in OCIO, but there's common threads that go through all of that. And so, whether it be as simple as something to say that my capital market assumption for a DC plan should be the same as my OCIO client, right? That allows us to create a bit of a foundation around that. But then also, there are things that we find are important for one type of client or one client in one part of the world that we're able to use in other solutions. I like to say that good ideas travel. And so, something that we've done for pensions, for example, particularly in Europe, where LDI was born before it was really called LDI, there's themes of that in our target date business here in the US around, thinking about duration of the liability. And in DC, it's not as mathematically obvious what the liability is, but it's long duration, it's very long time horizon. And so there are ways that you can kind of connect the dots on some of those things that we found to be very, very helpful. And so to have a solutions group whose mandate is very broad like that, we found to be pretty powerful.
Dan, I want to talk about clients a lot, but I'm just curious because we get asked all the time, how does the investment solutions group fit within the overall sort of client interface? Because as you noted, it's new in one sense. OCIO it's at least a new label, but it's actually been around. Is that how you approach all clients, or is that in sort of parallel to, selling traditional bespoke capabilities that you have?
Yeah. I think it depends a little bit upon what we're doing and the level of bespoke servicing that goes with that. And so, for example, we do a lot, as I said, in target date, and that ends up being consumed as a bit more of a product than it is a customized solution. We do custom target date as well, but for the off-the-shelf flagship type strategies, that gets serviced like most of our institutional business that we have more broadly. Whereas you go to the other end of the spectrum, and we're firm believers that the offering in OCIO, the investments is part of it, but it's all the other things that come with that. And so whether that be just regular client service, engagement with the staff to help them meet their reporting and board and governance requirements, and how do we deal with auditors and all of those things, that's in many cases almost as important as the investments. And so in that case, what we've tried to do is designate a very specific service team, relationship management team, so that the investment folks and the relationship folks are joined at the hip and are able to kind of service that client in a way that makes the most sense for them. And so, where it fits into the organization is it's kind of everywhere. That's part of the fun piece of this role, which is we're working with our large institutions like, corporate DC plans or sovereign wealth funds. We're working with intermediaries like registered investment advisors or the wealth platforms. We're working with the folks who have looked to do that full outsourcing. And so what we try to do is match the service elements with what makes the most sense and the needs of the offering. And so, it fits in the broader scheme of one of the main investment capabilities of the firm. We sort of break into equities, fixed income, and then multi-asset. And then we're all sort of allowed and build those solutions and service it in a way that makes the most sense for the client.
Great. Well, let's dig a little deeper into the OCIO label. As you noted, it's a continuum, right, of what you do for clients. Like when in your mind does it really become an OCIO mandate? Or because typically you're probably providing a bunch of different strategies and solutions for a lot of clients, right? Or is it more of a label than anything?
I do think it's a bit more of a label, and it's a bit more of how the end users are perceiving it. And I think this has been something as an organization we've had to get our head around to be less concerned about the label. And that's actually allowed us to be a bit more nimble in terms of all the resources that we have to be able to be working on different types of client situations. So, for example, just today we were having a conversation about a client in the Middle East that's looking to launch a target date strategy for their expat employees. Mm-hmm. And it will be open architecture. It will be fiduciary. Is that OCIO or is that core institutional multi-asset? Mm-hmm. Honestly, Ravi, I don't know if I care. Mm-hmm. Right? I think we want to make sure that we're able to, create that solution and bring the resources to that are important. Increasingly seen in the wealth space where folks want to do model portfolios, and they want it to be open architecture. And so that open architecture component feels a bit more OCIO. They may call it OCIO. Mm-hmm. Is it exactly the same way I think about an outsourced pension mandate? It's a little different, but that's where it goes. So I think you guys at Chestnut, I think, have been very early in this recognition that the solution spectrum goes, and there's a lot of overlap to that. And so I think we've tried to embrace a similar mindset that, it's really about bringing the right resources, and where they sit in the organization is less important. Now, I have the benefit of that being my organization, right? So I can move those resources around, and we've sort of developed that culture, which is great. And I think that has allowed us to ensure that, it's the best ideas that are coming into those conversations around client objective.
I suppose it's only really U.S. pensions where ERISA driven, where it's a little bit more clear, right? 321 versus 3038. When you get beyond that, the lines are a little more blurry.
I think that's right. Largely because we have those labels of sort of regulatory or statutory requirements that come with that. Mm-hmm. But the concept is true in all sorts of other segments. You see that in endowment foundations where, they have truly outsourced the investment office, right? That is, it's very clear delineations of responsibilities. We've seen that in other cases as well. And that's helpful, but if you're forced that, I think you end up missing a lot of opportunities.
So let's talk about client segments. How do you define the different major client segments that State Street, really services, or at least has targeted in terms of infrastructure and resources in this solution space? What are those priorities? And if you could break that down for us, that'd be great.
Yeah. So I think that there's different ways to be thinking about that in the sense of, there's regional nuance to this. There's different channels that we look at. And so retirement would be one. So that includes both defined benefit and defined contribution, as well as all the other sort of management supplemental plans that might be out there that all kind of comes around. That looks similar around the world, but there's definitely some local nuance that comes to that. We think about official institutions as a client segment. And so this tends to be your sovereign wealth funds, your central banks, things of that nature. Endowment foundation would be another channel or segment that we look to. Intermediary wealth would be another. And I think that's one that we're seeing increasingly is looking for services that are similar to what the OCIO teams do as folks are sort of deciding whether they need to build out their own investment organizations or whether they could be leaning on institutions like us to help them with that. I think that's sort of an interesting evolving space as we kind of go through that.
Can you define that a little bit more, the intermediary? Are those other asset gatherers that use your investment products on their platform and you sub-advise them?
At the highest level, that would be right. So there's someone sort of in between. That's why we sort of use this intermediary label. It's someone between us and sort of that end client component to it. And so, whether that be a registered investment advisor who has identified that they don't have or they don't want to build out full investment capabilities, that they want to focus on planning and structuring and all of the estate work, things of that nature. I think what you could make an argument that at its simplest form, model portfolios are sort of that first toe in the water into that space.
Yep.
And you see a lot of platforms that are out there that offer those investment advisors sort of all of that other services that they need to do that. So, like I said, I think models are the first step to that, but increasingly we're seeing that they need or want more. That when they've got a new client, that they want someone to talk to about that. When they're thinking about, the views of the world that they want to be communicating to their client base, they want somebody to help them with that. And I think that's sort of one example. I think the other ones that we've seen have been banks or wealth management arms. Again, same kind of story, that they don't have or want to build full investment capability. They need a partner to be able to do that. And that supports them on a very broad basis. And so that allows us to come in and work with them. Sometimes that's product development because they want to wrap things in a nice, easily distributable way, but they tend to be very customized product conversation. It's not just taking something we have on the shelf and putting a new white label on it type of thing. So I think that's why I say I find this to be really interesting, because it's evolving, and as that marketplace is trying to figure out exactly what it wants to be and what it wants to do, there's opportunity for solutions organizations to do that. And the other good thing, in my opinion, is that there's no one answer to this. And so, there's probably a spectrum within the spectrum now of different things that are going to happen within that wealth angle to it all.
Got it. What specific, services, infrastructure, or any other resources or teams have you had to build out to service the OCIO space that you may not have had to do back in the day?
Well, there's plenty of that, right? Because as you talk about all those different client channels, there are similar threads, as I noted earlier, but there's also very specific nuances to that. And so some of it has been the resources that we've had on the relationship management side that have, defined benefit experience, or maybe they worked at a nonprofit organization and have that sort of insight for E&F clients. Those types of things has been helpful to be able to have that client perspective to do that. There's technology that needs to be built out. The optimization tools that we built, when back in the day it was just a simple stock bond 60-40 game. Right now, all the things about all the different flavors of alternatives, understanding that all the different vehicles by which those alternatives come in as well, right? So what, the type of GP relationship you might have for a multi-billion-dollar pension plan is different than what you could do to deliver alternatives into a model portfolio. And so, the ability to not only understand but model all of those things becomes really important. Making sure that we've got the right teams in place from a manager selection perspective in both public and private markets to be able to do that. And again, it's no longer as simple as saying we like XYZ to be a private credit manager. It's like we need to find that XYZ is not only a really good manager, but they've got the vehicles that can be used in different types of accounts in different jurisdictions and all of those types of things. And so that has required us to get a lot more granular in that space. Things like asset liability modeling. Mm-hmm. That's not a new thing, right? That's been around for a long time, but that's another sort of subset that we've had to kind of work with, which is pretty typical, pretty standard with anybody who's managing in the pension space. But all of these things are required to take generics to specifics. And I think what has been, very important has been that ability to do that and come up with solutions that make sense for the nuanced circumstance of that client, and whether that be the conversation about asset classes, active management versus indexing, publics versus privates. All of those things are important, and you've got to be able to walk the client through what the trade-offs are there. Sometimes, as you well know, they'll come with you with a very specific idea about what they want to do, and that's great. But oftentimes it's a bit of a journey to help them develop what that answer should be.
So it sounds like amongst those 150 people you have people that have lived that with pension backgrounds, E&F, so they know the issues, they know what the vocabulary, they know the issues that are top of mind.
Exactly. I think it's important. We've tried to be thoughtful as we've built the team to have a mix of folks who may have been sort of on the asset management side only, but also those who have been on the other side of the table. Mm-hmm. because I think that gives us a perspective, encourage, members of the team to be involved in their own sort of governance of organizations that they feel passionately about, because that gives us a good perspective about what it means to be a board member or an investment committee member, and what is important in those conversations. And so, I've done some of that. Other members of the team have done some of that, and it's been incredibly helpful, to be honest, in terms of trying to get that full view of what is driving the client, because it's not just about expected returns and standard deviations. There's a lot more that comes into it.
Yeah, I could relate to that too. It does change the context a little bit when you're on their side of the table.
For sure.
Yeah.
For sure.
Let's transition into sort of the investment platform. It sounds like you have an open architecture, broad investment platform. Can you talk a little bit about the assets, if you will, that you have, and the investment capabilities and the building blocks that you can bring to bear?
So I think we've tried to be pretty open on this, no pun intended, in terms of the types of things that we're bringing to that table. It does start a bit with investment philosophy in terms of like, where do you want to start the conversations? And so, I think one of the questions I always seem to get asked is, well, should you be active or should you be passive? And I'll often say, well, that's the wrong question.
Yeah.
Right. It's the wrong conjunction. It's not or, it's and.
Yeah.
And so that has meant that we've had to be open to various ways to get that. Right. And so in places like the US or Europe, we start talking about indexing capabilities. That's something that State Street has been doing for such a long, long time, and it is a leader in that. And, we can bring, best in class for our clients in that case. So, that is often the toolkit that we will go to. But when you start talking about active and in different parts of the world and in different wrappers, right, there are areas that we're very good, and there's areas that we need to supplement that with other managers. And so, when you start talking about the tools that are available, that's exciting as an asset allocator, because that now means everything's open to that. And so, like I was, noting before, we'll want to go across multiple markets. From a philosophical perspective, we tend to believe that global diversification is the core starting point. And so we'll want to make sure we've got strategies and managers that can play in developed and emerging, that can be in small cap globally around the world, that we can get, differentiation across different parts of fixed income. Again, philosophically, we think that the idea of, something like a global ag or a US ag is a fine benchmark for fixed income, but there's a lot of levers within that you can pull. And so the ability to sort of break that down into subcomponent parts has been something that we've actually found some good success in. Clearly in the pension space, where liability matching with corporates is an obvious answer to all of that, but even into other areas, we found that to be helpful. Again, targeted to what the clients are trying to achieve, and where you might want to take on more credit risk, or where you might need to take on more inflation hedging, and building things around that way. I guess the other one I would note, Ravi, that we are big believers in is actually active asset allocation. That has been a big part of our multi-asset toolkit for decades now. And, oftentimes people will say, well, isn't that market timing? And at its extreme, maybe that's true, but that's not actually how we approach it. It's not all in or all out, but it's really trying to take very thoughtful, risk managed positions where we think that there are opportunities to tilt the portfolio to add value. And we've built out a pretty sophisticated process and series of quantitative tools that help us to form that opinion about what we think looks good and what doesn't at the moment, and are willing to do that in a way that, depending on the client's risk budget, but all else equal, do that in a way that's meaningful. And so I don't want to nibble around the edges and just, do a +1 here, -1 there, and that's all we're doing. But in the right moment, when the stars align and something looks especially positive or especially negative, we want to make sure we're able to shift the portfolio 5, 10, some cases 15%, overweighting stocks or bonds, and the nuances in between of, U.S. versus non-U.S. or developed emerging or high yield versus investment grade. All of those types of things we think are very actionable decisions. And so, when you kind of bring this all full circle, the work you do on setting strategic asset allocation and the levers you give yourself as part of that conversation then helps to drive about what leverage you can pull from an active asset allocation perspective. And that ability to add additional excess return that's not correlated to the stock selection or the security selection that you're doing in other parts of the portfolio. Just again, it helps in that globally diversified, not only in terms of asset classes, but approaches to add alpha. If we get it right in bad markets, then that also can be a risk control mechanism as well. And thankfully, it's been an area we've had a very, very strong track record on as well. And so what we found is that's been a good way to supplement, to help hit return targets, right? Those are always increasingly harder and harder to do. It's been a way to help diversify the portfolio. And I think it's also been a way that clients have really appreciated that we have a view and that we're willing to put that view in place in the portfolio.
I'm sure, because sometimes I feel like industry talks a little too much about manager selection. Of course, it's important, but it's not all about that. There are other levers there. What about, what investment capabilities specifically have you been building out more recently, or are you thinking about building out more just based on where client demand or just the investment availability is opening up?
Yeah, I'd say that it's probably a couple different things, and it's maybe a little bit of overlap in some of those themes. And so you mentioned privates. Clearly, that's been a place where our larger institutional clients have participated for a long time. But as new vehicles are being developed and this to those vehicles is being democratized, as they say, I think that has allowed us to think about the application of that into the more mid and small market space. It's allowed us to think about the application of that in areas like defined contribution. And so, we've launched recently what we would call sort of a hybrid target date fund that has both publics and privates to that, and multiple flavors of private markets. I think there's private market real estate's been used in the target date space for a long time, and we sort of extended that to that plus credit plus private equity. And so, I think that there has been legislative or regulatory support for that, which has been helpful, but also vehicle support where it's actually able to kind of get that in a way that makes sense in defined contribution, as an example. I also think that that's been a direction of travel as we look at some of our wealth businesses as well. And this is where I was thinking about it in terms of the overlap. That's absolutely been a way that we've been investing a lot of time to figure out how can we bring our solutions capabilities into that channel. We talked a lot about that a few minutes ago, but it's different, right? I don't have to think about taxes when I'm talking to my corporate DB plan. Right? Yep. The idea of how direct indexing fits into the conversation, how certain screens might fit in because the wealth client made all their money in technology and they've got a ton of technology stock. So how do we sort of factor that into an asset mix becomes really important. And there too, what's the role that alternatives can play? And I think we've long felt that the intellectual case for alts has always been solid, but also have felt that if you can't get good managers at the right price point, then a lot of the potential return that the alternatives could offer gets eroded away. And so that the end investor could end up with, maybe something a little bit better than public markets, but not wildly better. And it probably wasn't worth the time or their risk budget to allocate in that space. But that has been changing. And with that, we go back to this conversation about what's the vehicles that are available to be used. That actually means whether that's in a DC plan or a model portfolio or a custom wealth circumstance, that's absolutely opening the door for some interesting pieces there. So those have definitely been areas that we've been spending a lot of time on, and largely from a U.S. perspective. I'd also say our business is global. We've expanded a lot into the Middle East in the last couple of years. And so there too, this idea about taking general concepts and bringing them into local nuance becomes very, very important. What are your asset allocation assumptions when you think about things like Sharia compliant or Sukuk investments? And the build out of that has been very, very important to us as well. And that's not just a Middle East piece of it. That actually has global implications for, types of clients or markets that are looking for those same kind of things as well. So all really interesting and all exciting in terms of where the puck might be going to, and making sure that we've got the evolution of the capabilities that are able to handle all of those types of things.
That's great. Dan, what do you think State Street's, and I can think of a few based on what you've said already, key differentiators are? Because this space of OCIO now is getting crowded. I think, Chestnut is doing some work here on gathering a OCIO, defining OCIO AU standards and producing a directory of providers, but there's over 100 investment managers, consultants in this space. What do you think the keys to success are for State Street?
Yeah. Well, I think there's a number of different things that differentiate against different kinds of folks that are in the marketplace. I mean, obviously, as we started in the very beginning, this is not a new thing for us. We've been in multi-asset and fiduciary for decades now, so long history there. But that's not it. I think it really, for me, it's our start as the investment acumen that we bring to this. I mean, this is an organization of investors and problem solvers, and so the ability to bring that perspective into those conversations with clients, the willingness to customize, right? That means different things to different people, but to really kind of come at things with a blank sheet of paper, buttressed by the philosophies and things that we've got. But that approach, I think, has been very well received and has served our clients well. Given that we are, historically a very quantitative house, things like process and the drive for strong outcomes, are all things that I think are under that investment acumen headline that I put there. I think the other piece I would flag has been breadth of experience. We do work with a lot of different types of clients, which brings a certain level of experience. We do have a lot of staff on our investment teams who come from a variety of backgrounds, as we talked about, and that brings a perspective that helps our clients. We are a global team, and we spend a lot of time leveraging that. It's not just pins on a map or just cities where people live in. Our teams are talking to each other all the time and being able to leverage on what we're seeing, trends we're seeing in other places, and all of our clients can benefit from that. So I think that full swath of experience, to me, are all ways that we bring good ideas to our clients, since we're not going with that cookie cutter approach. And so you want those good ideas. And then lastly, and this one might sound a little odd, but I think we're an organization that knows governance, right? We're a globally systemic investment bank, right? A GSIB. And that brings with it all sorts of regulatory requirements, but it also brings with it process and controls, all those kinds of things. And I think for an organization who's looking to outsource the management of their assets, and oftentimes it's all of their assets, to know that this is an organization that can help apply that to their governance process, how they can we can bring best practices to that, how we can think about meeting the obligation that they have. As I said earlier, it's not just the investment obligation, but it's the full service obligation that comes with that. And so, it's part of what I think is interesting about the holistic value measurement work that you guys do, right? It's the complete package. OCIO is the complete package, and it needs to be thought of that way. And as an organization who is very strong on governance, I think that helps us understand the requirements that our clients have. And all of those things, I think, bring important perspective to them.
That's a great point. You guys understand governance and risk, given who you are. So Dan, as we kind of wrap up here, what's next? What does the future hold for the Investment Solutions Group at State Street? And what does 2026 hold for Dan Farley?
Yeah. I feel like it's going to hold a lot of plane rides for me personally, but we'll see how that all goes. Look, I think I'm really positive on the path that we're on. I think we've identified the channels that we can really add value into, and so how we continue to work in the corporate and E&F space, like that's table stakes and where our lineage comes from. But I think these ideas of the things that we've talked about, the evolving world of wealth, is going to be something that we continue to lean into. This expansion, we've talked a lot about the I've used the Middle East as an example a couple times today. We're seeing a lot of interesting opportunities in Southeast Asia and Japan. Like there's a lot of where this model again is, I think, something that people are looking to kind of lever on. So I think that will be an area that we're focusing on. And then lastly, I really want to make sure that we're thinking through how are we able to bring the collective offering to our clients in a way that they're able to leverage that the most. And so, that's always something that's top of mind for me and something that we'll continue to push on. Lots of other things under the hood, but those I think would be the big headlines from my perspective.
That's great, Dan. This has been an absolute pleasure. Thank you for sharing your insights with us, and I look forward to continuing to work with you and wish you all the success in the future.
Great, Ravi. Well, thanks so much for having us, and we appreciate your partnership and looking forward to that continuing as well.
Great. Take care.
Chestnut Advisory Group is a boutique, practitioner-led management consulting firm dedicated to asset managers and investment solutions providers. In addition to the Chestnut Solutions Institute, our advisory practice areas include distribution strategy, M&A support, go-to-market, and implementation and coaching services. This podcast is owned and produced by the Chestnut Solutions Institute. If you like this content and would like to access more insights, webinars, and podcasts, please check out our website, chestnutadvisory.com.